Hi, I'm Grant Mundell, investment specialist from Equity Trustees with our February market review. Tariff uncertainty, reporting season, and weaker US economic data occupied the minds of investors in February. Share markets fell with the ASX 200 underperforming global equity markets. With elevated valuations and an uncertain geopolitical backdrop, it's not surprising to see some equity market volatility. In global equity markets, the MSCI China rallied 11.5% as investors bought Chinese tech stocks. European markets rose on hopes of peace deals and relatively appealing valuations, while Japanese equities fell around 6%, negatively impacted by US tariff talk, rate hike expectations, increasing inflation, and a rising yen. A rotation out of US tech continued, with the Magnificent Seven down 7.1% and the Nasdaq down 3.9%. With the US underperforming the MSCI World for the third month in a row. Defensive sectors and assets outperformed as investors sought safety. Global trade uncertainty and weaker US economic data saw investors buy bonds despite increasing US inflation expectations. Reporting season finished up locally and offshore. In the US, reporting season delivered results broadly in line with expectations. Earnings growth was stronger than expected, but companies were not rewarded for their beats. And forward earnings guidance for 2025 was relatively subdued, with estimates revised lower. Notably, relative to recent reporting periods, the Magnificent Seven didn't surprise as positively. In Australia, listed companies delivered another solid set of numbers with slightly more earnings and dividend beats than misses. Share price volatility was a notable feature, with high valuations leaving little room for disappointment. While guidance surprises were balanced, aggregate earnings and dividends were revised slightly lower, down around 1 to 2% for FY25 and FY26, and that was fairly broad-based in nature. The Aussie banks fell around 5% during the month, delivering their worst monthly return in more than 2 years, as results slightly disappointed and headwinds increased. A-REITs dropped around 6% over the month, impacted by the surprise $4 billion equity raise conducted by Goodman Group to fund its expanding data centre development pipeline. US economic data was more downbeat. Inflation expectations rose, tariff uncertainty weighed on corporate confidence. Incremental news out of China was marginally positive, with manufacturing data improving and measures to support the real estate market slowly gaining traction. However, we await the magnitude of likely future stimulus measures to offset US tariffs and buoy growth. While in Australia, the RBA cut rates 25 basis points to 4.1% in what many described as a hawkish cut. Jobs data remained solid and inflation figures were broadly in line. Recent Q4 GDP data showed a small improvement, albeit the public sector continues to offset a weaker private sector. But with further rate cuts likely, growth should be supported as the year progresses. I'll be back next month with another market review.